Hey, welcome back. In this video, we're going to be talking about 4 different things you can do right now to buy a home if you're short on cash. Okay, I've got 4 things that I'm gonna hit you with today, but before we get into that, 2 things we gotta get out of the way first. First of all, if you didn't watch my previous video, no sweat, but we talked about the cost of buying a home. I wanna just summarize that whole thing to say you're probably around 6% for the total cash required to buy the home. Now that can vary dramatically. Go watch the other video afterwards for more information on that, but it's probably about 3% in your closing costs, 3% in the down payment minimum. And so we'll just use round numbers and call it around 6%. The second thing that we need to get out of the way is I want to make sure everyone understands exactly what equity is in a home. That's going to become very relevant in the next part of this video. Equity is how much your home is worth in today's current market minus how much you owe against the property. So let's use some round numbers. Let's say your home's worth $300,000 and you owe $100,000 against the home. So we would say then you've got $200,000 in equity sitting in the property. Okay. Now, something to keep in mind is if you're going to sell that property, sure, you might have $200,000 against it, but then the cost of selling, whatever that number is, you need to factor that number in as well if you're going to go sell the home. So it would be what you owe minus the expenses of selling, and then what's left over, that would be your working equity of what you could use for the future. Now, bear with me, even if you're a first-time buyer watching this video, that's important to know even if you don't currently own a property. So now that we've got that out of the way, let's get right into it. Point number 1 is there equity in your home that you could use for the purchase or in another property? So again, let's say maybe you're not selling your home currently, you just want to purchase a second one. Back to my example, if you only owe $100,000 on your home that's worth $300,000, potentially we could use some of that equity. I'm not going to go into great detail today, but you could potentially get a home equity line of credit. You could get a bridge loan. You could refinance maybe and do a cash out refi to get some of that equity out to use as cash for another purchase. There's a lot more we got to go into detail on that one for another video. But for now, if you own a property, just want you to remember there may be equity in that home that you can use. And of course, if you would like to get a valuation on your home to see exactly how much equity you might have, just shoot me a private message. They're free. I'd be happy to do that for you. Number 2 is there are 0 down loan options that you can consider. There's a lot of pros and cons to them. I would recommend you speaking with a loan officer directly. I'm simply a real estate agent. I do deal with these a lot, but a loan officer can give you very specific advice on each loan program. 3 loan programs you can consider if you are looking at doing a 0 down loan option in Minnesota, which is where I'm at. First one would be Minnesota Housing. It's called MHFA, Minnesota Housing Finance Authority. Basically what they do is with a typical, let's call it an FHA loan, typically that requires a 3.5% down payment. If you go Minnesota Housing, basically what they do is they give you that FHA loan for 96.5%, and then they give you a second mortgage for the remaining 3.5%. Okay, you're still financing 100% of the loan. They're just basically giving you a second mortgage for your down payment. Okay, the second one is VA, so that would be for veterans. Of course, you've got your veterans benefits. Speak with a loan officer as well about that. There can be some pros and cons of it. There is a funding fee that's usually got to get rolled into the loan. But it's still a great benefit for many people over the long haul to be able to finance 100% of it. You don't have a second mortgage per se, like with Minnesota Housing. It's just a true 100% financing and can have some great benefits for veterans that qualify. The last one is going to be rural development or a USDA loan. These loans really are meant to encourage people to move further out of the main metro areas. This does apply all over the country. All we're really talking about is Minnesota today. So that would be to encourage people to move out of the Twin Cities. So if you're looking right in the metro, it's not going to apply to you. But a lot of times when people are looking to move out, get a little more acreage or something, can be a great loan option to move further out. Let me know what areas you're looking in, and I can let you know if you're eligible potentially for that type of a loan program. A couple of things that I want to caution you on if you're thinking about doing a 0 down loan program. When you purchase a home 0 down, you really have no equity buffer right out of the gate when you purchase that home. You start with 0 equity buffer at all. If you had some life event, you needed to change jobs, you wanted to move out of state, you hate Minnesota winters, you want to get out of here, whatever the reason is, probably an unplanned event that had you wanting to move in the short term, there's no equity buffer there, and then you've got the cost of selling your home as well. So all of a sudden you could be upside down on your home a lot more quickly if you did a zero down loan option. If you are planning on being in the home for at least 5 years and you're very, very confident that your job is solid, you're not going to move, then it may make a little more sense to do a zero down, because again, you'll pay down that loan over a longer period of time, and you'll have a longer period of time of hopefully appreciation in the home, so that you may establish an equity buffer there along the way. So it can work out okay. Number 3 we're going to talk about is gift funds. Now, this is actually something that's fairly obvious, but a lot of people forget. With a gift, it's exactly what it sounds like. It's a matter of going to grandma or grandpa or an aunt and uncle, somebody, maybe even your parents, that have funds that they may be willing to gift to you. This cannot be a loan, to be clear. So if it's something that your parents are going to want you to repay, you cannot use that for your down payment money. You may be able to use some of it for your closing costs, that other portion of the 6% that we're talking about. Number 4, retirement accounts. Retirement accounts. Now, some people will either love it or hate it, and I'll probably get a lot of nasty comments, and that's totally fine. Let me know what you think below. But you do have the ability to pull against a retirement account. Now, I would speak to a financial advisor before you do this. Speak to your loan officer about how exactly to do it if you want to. I'm not suggesting this is right for everybody, but it is just an option that you can consider. With particularly with like a 401k, there are different ways to take an early withdrawal or to do a loan against it, something like this. Again, talk to your loan officer about which one's right for you, but you can potentially pull out of that 401k for the sake of purchasing a home. There are sometimes penalties or fees that come along with that, so just make sure that you understand, the risks and the benefits to it, and it's something that you can discuss again with your loan officer and with your financial advisor. So there you go. There's 4 different ways you can still purchase a home if you're short on cash and need a little bit of help. Now, next up, I'm going to be doing a video on pre-approvals. So as soon as that's ready, it'll be right here for you to click on for that. And of course, make sure and go subscribe to me down below. Thanks so much. I'll see you again.